are three buckets. One is the deep value bucket. Over there, I feel the large private sector banks, some general insurance companies, and some NBFCs and life insurance companies as well. These sectors fall under the deep value kind of opportunity. There are some sectors where there is continuing business momentum. So whether it is renewables, whether it is power transmission, these are continuing business momentum, and we continue to like that as well. And there are some new age sectors which are probably still not yet represented in the market, and which probably brings us to the private equity piece of it, is that aerospace. I think these are all new sectors being born in the market, and people yet don't know the kind of potential it holds. And that is what we will uncover some of it in our private equity investor day today.
Okay, some of the themes in the private equity investor day are aerospace, energy transmission. Now, these are big boy businesses which require a lot of capex. They are dominated by large groups, and while they are exciting businesses, they are not the typical pace where private equity investors they invest in.
No, so see, you are right. The larger piece, the large system integrators or the OEMs is the big boys game. But there is a big supply chain attached to that, where there are a lot of small players which can scale up quite dramatically. And energy transition is not one sector, right? I mean, there are so many sectors associated with energy transition. Nuclear, wind, solar, biofuels, power transmission, electrification, EVs, battery storage. So there are many sectors. And since these sectors are all still evolving, there will still be investment opportunities over here. So I would say that there are enough and more small and mid-sized companies which can scale up. And yes, they will need capital at this point of time, growth capital, and that's where we come in.
Okay. The history of Indian private equity investing is somewhat khatta meetha. There are great success stories, but there are a lot of companies which never make it to the big league. How are you, and since this is public money which you would be managing, how would you ensure that the private equity fund where you're investing in, the journey is going to be a smooth one?
See, nobody can ensure a smooth journey, but what I can say is that we have tried to address a few of those concerns. So number one concern is private equity tends to be an illiquid asset, right? Your money is locked in for 10, 12-year period. We have shortened that horizon. Our products are more 5, 7-year kinds. Number two, it tends to be, if you are at the the left hand of the spectrum, which is venture capital seed, then your odds of success are very low. So we have tried to find a sweet spot in both the things and tried to bridge the gap between venture capital investing and public markets by focusing on growth stage investing, companies that are likely to go public in a 2 to 3 years time frame, and companies that need growth capital before they are ready to do IPO. So that's the sweet spot for us, where we can improve the odds of winning as well as find businesses that can scale up, which are worthy of getting listed.
This is not for the first time we are talking private equity with you. One of the success stories for ValueQuest has been Wari. Then you've also invested in Wow Momos and a couple of other startups. Which have been the super hit names for you?
So again, disclaimer, since we manage money for the public markets as well. But yeah, Wari has been one of our big winners for us on the private equity side as well as on the listed market side. And the numbers are there for everybody to see. The kind of scale change that has happened in this company. This company used to be a 70 crore PAT company in FY24. And if I were to annualize the FY25 number, they'll end up with a 1700 crore profit in FY25. That's a fantastic scale up. I mean, that kind of scale up, where are you going to get in a manufacturing business in India?